All right, despite economic worries, our next guest says that he believes retail sales are getting better and the consumer is still spending despite some recent disappointing reports. Joining us right now with more is Jan Kniffen. He's the CEO of J. Rogers Kniffen, WWE. Jan, we've seen a lot of reports lately. Last week, it was Lululemon that had this big disappointment and said that it was because of uncertainty with consumers and that they were worried about tariffs and other things, and that's why they were warning for or issuing a profit warning for the current year and current quarter. We've heard from other places like Bank of America's, whose CEO, Brian Moynihan, told us that spending is actually up across the board when he just looks at what's going out of consumers' accounts at this point. And we started wondering if it was a weather excuse that retailers, some retailers are using more than others. What do you think? You've been watching this a long time.
Okay, this is not an April Fool's joke. Retail sales are better in March than they were in January or February. And they look like they're getting a little better going forward. I was in the Southeast last week talking to retailers and investors. I'm in the Denver area, Colorado this week, talking to investors and retailers. Retailers are scared. They're worried about what the consumer is going to do if tariffs are imposed. So they're giving conservative guidance. But sales are okay. And I think they're going to be fine right on through April. I really do think there was a big weather issue in January and February and early March. Sales have consistently gotten better since then. I think that retailers that are reporting like Lulu had some unique problems, right? They've got Vuori and they've got Alo that they didn't compete with before. They're trying to be all things to all people, so they're a little over diffused in the stores, and they've got issues they're dealing with. And why wouldn't they give conservative guidance? Because we're all worried about the consumer and tariffs. But right now, the consumer's worried about tariffs. The consumer's worried about inflation. They've told that in all the research. They've said, we're looking forward, we're concerned. But right now, they're looking at their pocketbook. And just like Moynihan said, yes, we're in fact spending more. They've now opened their pocketbook and said, gosh, it's not so cold I can't go shop. Gosh, I still got a job. My wages are still going up a little bit. Inflation's not as bad as it was, and they're spending. And if we pass through all of this tariff that we've just talked about in retailing, at the shelf level, we'd have to raise prices somewhere between 8 and 10%. Okay. Well, we won't do that. We'll fight the battle with the vendors, and we'll fight the battle with the supply chain, and we'll fight the battle in our stores, and we'll raise prices less than that. And the consumer will react. There'll be some trade down, there'll be some substitution. But as long as the consumer's got spending capacity and they're not overborrowed, and they're not right now, their payback rate is fine, they'll keep spending. That's what they do. They may tell us we're scared about the future, and some point in time, that may actually shut them down. But what normally shuts them down is jobs, wages, and their own personal ability to spend gets damaged. We're not seeing that.
Well, Jan, let me ask you. So you're saying that if, let's say, tariffs go up 20%, which is what the Washington Post is describing this morning, maybe even 25% has been the higher number that's been out there, that is not how prices are going to go up. You're expecting maybe a 5% increase on this that gets passed on to the consumer because there will be efficiency that wrings it out throughout?
Well, we're already seeing people talk about that, right? What a dollar teach us. We've already offset 90% of what the anticipated tariff is going to be. So, yes, retailers are already reacting, negotiating with their suppliers. We're seeing all of that happen. So if we passed it all through, like I said, if it was 25%, we'd pass through about 10% because, you know, it's if on a $100 item, you've got about a $40 base that you're going to put the tariff on. So right. You put 25% on that, you have to pass through 10%. If you put on a 20% tariff, you're going to pass through about 8%. Well, that's what you're working against. You're saying to yourself, I don't want to pass through 10%. I don't want to pass through 8%. What can I do about it? And Walmart's already talked to all their suppliers. We know that. We know other people are telling us, boy, we're putting pressure on all these foreign suppliers. There will be some people take prices to the vendors will take the price to the retailer down.
So forget what China's President Xi says. This is taking place, and it's going to happen
They're
anyway.
Not listening to President Xi, apparently.
Will the retailers' margins be hurt by this? Is anybody who's considering potentially investing in retail stocks?
Well, yes. If you have to pass it through, and the consumer reacts, and you don't have the very best product on the market, you're going to have to take something out of your gross margin to get them to buy it. So that's why they're pushing so hard on the supply chain and so hard on vendors. So yes, there would be some negatives, but in general, when you look across the board, you know, the higher end you are, the less you get impacted by tariffs. The lower end, the more you get impacted. The more you're in electronics, you're impacted. Apparel's not as much impacted. I mean, it's all across the board in retail. But if on average it was 20 to 25% on all imported product, what would happen? And if it all got passed through, it's what, 11% of GDP or something like that. So the consumer is going to see inflation. It may go from 2.7 to 3.5, 3.8, somewhere there on a one-time bump. That's not permanent, and they'll react to all of that. So there could be some temporary pressure on margins, but then it would settle out and we'd figure out how to deal with it. And in the meantime, we'd be jamming down the supply chain trying to keep from passing that through. And we've seen it. We've dealt with tariffs and quotas in retailing since I got in the business 100 years ago. It's just something we always deal with. We're always fighting the battle on the cost structure or tariffs or quotas. And this is not different. It may be broader, which is, I'm concerned about it. I mean, I think the consumer won't like it if we start raising prices. They never do, but we'll certainly try not to. But I don't think it's going to wreck retailing. But what's going to wreck retailing someday is the consumer saying, I can't afford to spend anymore. They are not telling us that.